Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on what the failure of the US bailout means for New Zealand. Firstly, it will mean high interest rates for longer, particularly for people on fixed mortgages. It will mean a longer recession. Most people had thought it would end in September. Probably it will last through into 2009. It will mean lower house prices, but from our point of view, that's not unexpected. But it won't lead to a depression, and it won't lead to a collapse in New Zealand's banking system. Firstly, high interest rates for longer. Why is that? I want to show you a few charts. Firstly, this one, which shows the margin that banks pay each other to lend to each other. And you can see that over the last year it's been rising and it's just spiked significantly. Banks are nervous about lending to each other on international markets. That means their funding costs, so what it costs them to borrow and then lend on to other people, have risen. And they will eventually pass that on to us in one way or another. And you can see here from the second chart that those funding costs have been rising, but the interest rates they charge us hasn't been rising quite so fast. So that means profit margins at the banks have been squeezed. They haven't passed it all on. And you can see here in this third chart actually what's happening to the interest spread. That is the profit margin the bank's making. It's actually been falling quite significantly over the last year as banks absorb some of those increased costs. The Reserve Bank will try and help them. It's likely on October 23 the bank will produce an official interest rate cut of 50 basis points or even more. You'd have to put your money right now on at least 75, if not 100 basis points. The bank wants to front load or give some extra help to the banks so they don't have to put up interest rates for us, particularly for business, but also in fixed mortgages too much. What it does mean though, it's unlikely fixed mortgage rates from the main banks will fall that much. Now, why only a long recession? Why not a depression? Some people have used this phrase and compared the collapse overnight on markets to what happened in 1929. A couple of reasons. Firstly, the US economy isn't even in a recession right now. Everyone's been talking about the US economy being in a mess, but actually it's still growing, which is better than can be said for New Zealand. The rest of the world is largely still growing too. Europe's slowing down fast, Asia's still going strong, and Latin America is still going gangbusters, so there are other sources for growth in the rest of the world. But it will mean reduced demand for New Zealand's exports and reduced prices too. And already we've seen dairy prices drop 10% in the last week, and they're down 20 to 30% in the last 2 months. We'll see reduced demand for tourism, so not so many people coming through the airport. But oil prices will fall. They actually fell $10 a barrel overnight to $95 a barrel. There is one silver lining. And why won't we see a depression this time? There's a couple of other reasons. Firstly, our banking system is much more interconnected and robust, believe it or not. Also, our floating exchange rates, we simply didn't have many of those in 1929. This will act as an automatic stabilizer and help us deal with shocks to the system. There are also fast-growing Asian and Latin American economies which will help us, and the central banks are not making the mistake they made in 1929 of holding money back. They are pumping money into the system hand over fist. So we see a longer recession going into 2009, but we also see house prices falling 30% from their peak in November last year. This is not new, we've been saying this since February, but we certainly think with this development in the global credit crunch, it's much more likely and possibly will happen sooner than many people had expected, maybe even sooner than we'd expected. Key thing though, banks will not fail in New Zealand. There have been collapses overseas, but they've been well managed and depositors have not lost money. In New Zealand, our banks are well capitalised and well regulated. And we haven't seen a sharp rise in delinquencies, i.e. people not paying their mortgage on time, whereas in overseas markets that has happened. New Zealand's banks aren't as dependent on short-term wholesale money as some of the other banks that have collapsed. It's true that New Zealand banks rely on about 30% of their money coming from overseas short-term markets, but much of that is from their Australian parents, and they're in a pretty strong shape. They also have strong capital backing, and the Reserve Bank was very careful early in the process to warn the banks to expect a 30% fall in house prices and to be prepared for that. So our depositors will be fine. If you're asking yourself the question, am I safe to put my money into a New Zealand AA rated Reserve Bank regulated bank? You are. But banks will slow their lending. And Kiwibank, which is out there with very Very good rates on mortgage rates, about 7.99 versus the main banks on 8.7. They will do well. In fact, some of the big Australian banks may even be saying, well, you can have it. We'd quite like to look after our cash for now. So there will be no more easy money for home lending. There will be no more 80% plus home loans, or very difficult to get them. Low doc lending, that's where you don't have proof of your income, particularly useful for small business people, very difficult to get now. Top-ups, much more difficult. Remember when you used to revalue your house and ask for an extra chunk of money to buy a car or go on holiday? Very difficult to do from now on. And we will see house prices fall 30% from their peak. I'm Bernard Hickey. That's what the failure of the US bailout plan last night, what I think it means for the New Zealand economy.